I would now focus on the decisions and deliberations of the Monetary Policy Committee. As you would be aware, the Monetary Policy Committee, that is the MPC, met on 6th, 7th and 8th February based on an assessment of the macroeconomic situation and its outlook. The MPC decided by a majority of 4 members out of 6 to increase the policy repo rate by 25 basis points to 6.5% with immediate effect. Consequently, the standing deposit facility, that is SDF rate, will stand revised to 6.25%, and the marginal standing facility, that is the MSF rate and the bank rate, to 6.75%. The MPC also decided by a majority of 4 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. Let me now explain the MPC's rationale for these decisions on the policy rate and the stance. The global economic outlook does not look as grim now as it did a few months ago. Growth prospects in major economies have improved while inflation is on a descent, though inflation still remains well above the target in major economies. The situation remains fluid and uncertain. Reflecting this recent optimism, the IMF has revised upwards the global growth estimates for 2022 and 2023. As price pressures wane, several central banks have opted for slower rate hikes or pauses. The US dollar has retreated sharply from its highest level in 2 decades. Tighter financial conditions caused by aggressive monetary policy actions, volatile financial markets, debt distress, protracted geopolitical tensions, and fragmentation continue to impart high uncertainty to the outlook for the global economy. Amidst these volatile global developments, the Indian economy remains resilient. Real GDP growth is estimated at 7% in 2022-23, according to the first advance estimate of the National Statistical Office, that is the NSO. Higher rabi acreage, sustained urban demand, improving rural demand, robust credit expansion, gains in consumer and business optimism, and the government's enhanced thrust on capital expenditure and infrastructure in the recently presented Union Budget 23-24 should support economic activity in the coming year. Weak external demand and the uncertain global environment, however, would be a drag on the domestic growth prospects. Consumer price inflation in India moved below the upper tolerance level during November and December 2022, driven by a strong decline in prices of vegetables. Core inflation, however, remains sticky. Looking ahead, while inflation is expected to moderate in 2023-24, it is likely to rule above the 4% target. The outlook is clouded by continuing uncertainties from geopolitical tensions, global financial market volatility, rising non-oil commodity prices, and volatile crude oil prices. At the same time, economic activity in India is expected to hold up well. The rate hikes since May 2022 are still working their way through the system. On balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break the persistence of core inflation, and thereby strengthen the medium-term growth prospects. Accordingly, the MPC decided to raise policy repo rate by 25 basis points to 6.5%. The MPC will continue to maintain strong vigil on the evolving inflation outlook so as to ensure that it remains within the tolerance band and progressively aligns with the target. Inflation is expected to average 5.6% in the fourth quarter of 23-24, while the policy repo rate is, after today's revision, now stands at 6.5%. Adjusted for inflation, the policy rate still trails its pre-pandemic levels. Liquidity remains in surplus with an average daily absorption of 1.6 lakh crore under the LAF in January 23. The overall monetary conditions therefore remain accommodative, and hence the MPC decided to remain focused on withdrawal of accommodation.
वीडियो पसंद आया तो हमें लाइक, कमेंट, शेयर और सब्सक्राइब जरूर करें।